If you repatriated all the money you had overseas, A, would you, if you got a cut? And B, what's the order of priority? Buybacks, dividends, CapEx?
Well, look, I would start, first of all, tax reform is actually critical for us. You know, for us to, frankly, get rid of some of the anomalies that are causing things, I think other things in the way companies are thinking about, where they're going to be based. For us to be more competitive on a global basis, it's essential that it gets done. We're working very hard with them. And, as we think, our capital allocation strategy is really focused on what our strategy is. And so, tax schemes can change over a period of time. But if you look at J&J, whether it's been at frankly, a 25, a 10, a 5-year period, we look first at dividends because we know our investors are depending on us for that. And that's after, of course, we've invested in the business in the right way, which we do. For example, over $9 billion in research and development. And then we make sure that, after that we're always on the look for new technologies that we can acquire. About 50% of our innovation we source externally. And then we look at other things like, what about buybacks, to make sure that we're making smart use of that. And of course, when we do those acquisitions, we try to make sure that we're doing them in an appropriate and a tax-efficient way as well.
Alex, you say tax reform is critical. Explain to us how that is. For a couple of numbers, I think your effective tax rate is something just over 20%. Roughly, yes. Okay? So if the tax rate comes down to 28 or 25%, does that change Johnson & Johnson at all?
Well, David, the more important issue for us is really the flexibility that it gives you to your capital deployment. And what you want to make sure is that companies are making investments based on the inherent value of the investment, not on the particular tax scheme. And, so things such as inversions, well, a lot of that's taking place because companies many times are being rational based on the tax rate that they can be. And so for, another example for us would be how competitive you are on a particular acquisition. If a company coming out of Europe can pay a much lower tax rate versus us, it may preclude us from being able to acquire great technology for the future.
Are there instances where Johnson & Johnson was put at a substantial competitive disadvantage because of tax rates in terms of acquiring other entities?
Well, we've been fortunate based upon the targets that we have. We haven't seen it be a very significant issue to date, but it does concern us, as you see some of these gaps widen. And again, we like to have a system such as territoriality, where not only do we have a more competitive rate, but frankly, where you have more flexibility, more mobility to ultimately deploy that capital in the most efficient way possible.